Oh, come on, man. You fell short, just so short of reaching the bottom of the cloud. Come on, man. Hey, it's Kimosabi here, giving you an update on what we're seeing here. And it's a very nice buyback going on right there. Very reminiscent of what happened on December 20th. A very nice buyback. So the price action didn't come down as far as I would have hoped just yet. It still may, but we'll see. But the Ichimoku cloud did not make it to the completion of the trade setup. That could be indicative that this is stronger and more bullish than we would expect, but it's still a target and it's still where I'm looking for an opportunity is 87,600. So we might see that come in the next few days, maybe sometime later this week. There is some patterns that suggest that could be in the cards. Let me draw on this real quick. So we had from all-time highs, we had the initial move down. We had a similar push going on here and a bottoming structure. Now this wick got bought back up quite a bit, but then it fully retraced, and I think that double bottomed. I don't think that that took out the low. If it did, it was ever so slight. But then you reversed back up, then had a nice grinding action to break those lows to take that liquidity before taking the upper liquidity. So it's really just a chopping back and forth, kind of like I was suggesting that would happen with a take the low, take the high, then now take the low again. The market maker special, where they want maximum liquidity through this range, and sure enough, come right back up and close the daily back in the same area. Really, nothing has happened. There's nothing to get super bullish about. There's nothing to get super bearish about. It's still in the range. But if this 87.6 to 85K target is to be met, you might be playing out something similar here before grinding down like this leg. So it's something to watch for. Out of there, look for an uptrend to start and then ride back in the cloud, maybe in the Ichimoku cloud. We will see. From a daily chart perspective, you did close a low here. This was closing an ever so slightly lower low. So you may have an ever so slightly closed lower low here. Maybe you pop up, grab that liquidity, but still close back inside the range just to tugging at your heartstrings, play with you a little more in this range. Something that I'd like to see if I was to be bullish from this area is some higher high, higher low, back to support, and then push up again and kind of push up to the 106 area and then chop around in here for a break higher. Bring it down here to a 4-hour chart now, and we want to take some measurements to see if these legs do match. Currently in the candle form, they do not match. However, on the line chart, it does show a different picture. It does show you a lower low close. We're working, maybe we get a higher high close. That would be great to see. But I do want to take a measurement here, the trend-based fib extension from the first leg down from all-time high on a closing price basis. And measure from the low, or from high to low, and project from that high and see where we came on the candle chart, which is pretty interesting. I'm going to line up this right at the top wick of there, and it came right to the 1-to-1. So the 4-hour on closing price, measuring this on closing price and projecting from the ultimate high to the ultimate low of that leg down, it matches to the 1-to-1. So there's an argument to be made here that that is complete, and we could be moving up from here. Elliott wave, you'd have yourself a very decent ABC structure where you have your A leg down, standard B, and the C, which that came to the 786, I think, in standard Elliott wave practice. It does look like a finished reaccumulation, swing low, kind of stop everybody out and then reverse higher. That's kind of the look that it's giving. I wouldn't mind another press down into 87.5. there's a little bit more liquidity down there. It might want to take it. It might not. This might suffice. It depends on the market makers and whoever was buying in this area, assuming we are going to be bullish coming out of here eventually. It depends on if they filled their bags or not. If they're full up, then they're good. Then they could start it back up into markup phase, and it's good to go. Just like we marked out in the previous video, I was marking this as an ABC up, ABC down for B. There's your C leg up. Looked clean. Nice push down into what looks like, I mean, in Elliott wave terms, that does look like a 5-wave type of structure. And it could be complete. It could have another leg down. But yeah, let's zoom into that leg. We'll just look at that. Because what you could have here, zooming in, is the same type of liquidity situation where you have a B, back up for C, kind of take that liquidity up there. Another maximum liquidity, what the market maker likes to do. And then you would have some form of a 1, 2, 3, that would be 4, and then one more push down for the 5th wave in Elliott wave terms. Still in the cards. How would I invalidate that? Well, lately, because the way that the Elliott waves work over the past 2 years, this can come all the way up to like 99 to 100,000 and still technically be a wave 4 and still push down. So I'd probably measure the 1-to-1 of this leg back up to like 199,000 maybe, and then push down into that target and maybe lower. It's certainly possible to go lower. Certainly something to watch for. But if it is bullish from here, and this is your low, this is the bottom, this will hold, and it doesn't make it to the 0.5 fib retrace and the bottom of the Ichimoku cloud, all that, then what I would want to see coming out of here on a 4-hour basis, preferably on a daily, but on a 4-hour, I would want to see it close a 4-hour higher high, somewhere around 97. And then if it closes a 4-hour higher high, that'll be higher than there, then I would look for the higher low at previous support. It's a standard trade setup that I do over and over again. Stop loss goes at the low and look for the higher low. But seeing as I'm still looking for 87, I'm kind of expecting to get stopped out if that one does close a higher high. I'd look at the higher low, and as soon as I get some form of uptrend on a very low time frame, I'd enter. I'd probably have my stop loss pretty tight there, and any break of that stop loss, I would expect this liquidity to get taken and make it to target. It doesn't have to make the target that I expect, but I'd like it to. But yeah, you could assume this is an accumulation range, and you're just chopping about in here. Maybe you'll take the liquidity up there, take the liquidity there, goes back in the range. That would become a stop loss because there's no more liquidity below that. We'll get into the bigger chart on that. Let's look at that now. Let's zoom out a little bit. So in the zoomed out chart, you can see where the liquidities were. They're all, of course, at these lows, and they got stopped out. I think this one stopped out all of those, and then pushed back up to drop that liquidity off up here, and then pushed back down to grab this low. So now that those are all taken, this may be a push up to take these orders and dump them off over here before pushing down again. Definitely possible, but that's why I want to see this get down to like 87 to 85, because there's still this pocket of liquidity right there. That's the next pocket. After this low gets taken out, this is what the market is hunting. And it could just be coming to that 87.6 target, or it could be wanting to break lower. You do have head and shoulders patterns that everybody's looking at, everybody and their grandma. You have, of course, the shoulder, the head, and now another shoulder. And what you may have in the coming days is people drawing out shoulder, a head, and maybe another shoulder here. that actually gives you a little bit more of a high probability setup for a sell if it breaks down below, because you have a head and shoulders pattern on the right shoulder of your head and shoulders pattern. So something to watch for. You may see it in the feed. If you don't see it in the feed, it's more likely to play out. But if you have people start showing charts with that on it, then it's less likely to play out. If this head and shoulders pattern does fail, though, since it is a head and shoulders pattern, the target of a head and shoulders failure is the height of the head and shoulders pattern projected from the shoulder, which gives you a target of like 115, maybe to 117, something like that would be the projected target of a head and shoulders pattern failure. Ideally, coming out of here, and assuming if this is a completed pattern, what I'd like to see coming out of there is a repeat of this. If we can get that, that would be really cool, because then we can expect this pattern to repeat up here into a February mid-cycle low that would be eventually mimicking this in reverse. And then out of that mid-cycle low in February, you repeat your November leg into the end of the month, into like March, for a pretty explosive rally. And the target on that is 160,000 or something like that. So I'd like this pattern to repeat somewhere up in here, take its time grinding back up, because that would build a more of a cause for markup phase to continue, as the market would be kind of in a distribution into the market maker's pocket, and the market maker, he'll just mark it up, and you'll have higher targets that way. If prices just to shoot up from this area, I would be cautious to say, hey, we might be experiencing some form of top, because the way the market maker would kind of tackle that is he received a lot of selling in this area, and if he just throws it up there really quickly, he's just dumping all of those sells on other people, and those other people are going to be buying it up. They're going to be buying the breakout, buying the uptrend, but that would be his distribution method before markdown would occur. So ideally, you want to see slow and steady coming out of your bases, to basically to have Elliott wave traders or other people say, well, that's a corrective three wave or something like that, or it just looks very corrective moving up, and nobody would expect an impulse to come out of there after a grinding action like this repeating up there, and then it just goes in February. It just goes like very abruptly and doesn't stop. That would be ideal. So no reason to rush into trades. You don't have to FOMO in. Look for your setup and stick to your setup, especially on a 4-hour chart here. If you get a 4-hour higher high close somewhere around 97.98, then that's higher than that. Then take your higher low at previous support and see if it gives you something. See if it gives you a higher high. Take a small bit of profit and expect some chop. Try to enter again on a higher high, higher low, and add to the position and keep going. So that's kind of the way I'm looking at it. I'm still anticipating 87.6 for the Elliott wave pattern that I'm familiar with, for a buy setup, or for a buy setup to come out of there on a very low time frame and trade it up, if it does give some kind of reaction out of there. Or this closes a higher high, I'll try to buy the higher low and then see if we can get some form of uptrend getting out of here that looks very slow and corrective. Much better to have it slow and corrective and build a base, or build what I call a cause. In Wyckoff, you call it a cause for more of a markup phase. So that's all I got for now. I'll try to update tomorrow if we do get any price action that kind of changes my thought on this. But it may be just repeating this accumulation range over here. So you may get another low out of there and then wait for an uptrend to start, especially a daily uptrend. If the daily comes down there, wicks again, and gets bought back up again, that would be three drives, 1, 2, 3 drives down, and I'd put my stop loss there, call it good, and say, hey, let's see if we can get an uptrend out of that. But until then, I guess I'll talk to you next time. Have a good night. Keep your stops tight.